up, YouTube? How are you doing? Okay, good to have you here. Welcome. Another day. Another live stream. Oh. There is never a random pivot on the chart. Shirt and pet. Yeah. What's up, Tim? You at work? Another day, another dollar. Oh yeah. This is not a bad song as like a third song in the first couple of minutes when I'm like setting up some stuff, you know. Quite nice. Sarega, give me music. Hi, Tim, Sibel, Donovan, how you guys doing? Hiop, Mondo Tav. Remember to hit the like when you jump in. Thanks, Donovan. Appreciate that, man. Hotten Totten, Dionysos, goedemiddag. Goed dat je erbij bent. 212 Moe. Bones, what's up? Bones, by the way, did you receive your t-shirt or not yet? I'm not sure because I get a notification if the t-shirt arrives, and I get notifications randomly as people live everywhere in the world, so stuff arrives any given moment. So I actually didn't really check. Might still be on the way. Bina, welcome. Yep, wearing my cap and my shirt. Yeah, absolutely. Sanjay, Maria, Brahim, Dawa, Rob, good to have here. Adam, Luxiri, Nunal, not yet. Okay, it's on its way because I have sent it, so it will come. It will come. Okay. What's up, everyone? Good to have you here. Played hooky today. I will enjoy this stream in its entirety. Good morning, everyone. Yeah, what's up, Adam? Okay, so do you have a free day now? Not working? Going from location to location? The build-up is epic. I know, right? So we have the first song, Dreamer. I just closed Spotify. The first song is Dreamer. The second is from Alan Walker. The second is Samurai by Jim Joseph. And the third one is Vera, but I don't know who made it. For the ones that are interested in that final song, when I was talking, I can boot up Spotify again. But Joe, welcome. Good to have you here, bro. Appreciate your streams and info. Slowly learning. Part of the process, right? So just keep it up, keep learning, keep grinding, and especially take it step by step, because Elliott Waves generally takes a while to learn. So if you want to do too much at once and overwhelm yourself, you're going to get demotivated because you might not get the hang of it. So that's why taking it easy is so important with Elliott Waves, in my opinion. Step by step, better slow and steady. That will get you there. Christine, good to have you here, by the way. So yeah, okay, in today's live stream, which will be another 47 or 57 minutes because I have a meeting at 4 p.m., which is in 57 minutes. So I have to go. But in this live stream, of course, we're going to cover Elliott Waves. Besides the weekly and daily live stream, besides the weekly and the daily time frame, I'm also going to cover the more local stuff in this live stream compared to the video this morning, which was mainly the weekly and the daily, right? And then we observe what price does. So today, from a news standpoint, is quiet. Thursday, June 20th, which is tomorrow. We have a bit of news, but you know, there's nothing going on today. So, oh look, that's the 27th. That's the week after. So yeah, nothing really going on from a news perspective. Might be a relatively calm day. Hold on, crypto. Good to have you here. Welcome. Always spamming the logos. Cheers, hold on, crypto, man. Appreciate it. So yeah, let's start, shall we? It's a holiday. Today's a holiday in the US. Ah, I see. I see. I have no idea. What's up, name Emra? How you doing? Okay, oh, well, it's good to know. Should also be slowing now. Yeah. June 19th. Okay. I see. Well, at least some of you follow what's happening in the US or live in the US, of course. Okay, so yeah, locally found resistance at the local previous range point of control, which is the range that we had up here. Price moving to the upside, and yeah, the rejection is clear, of course. Bullish CVDs we had here already played out. We had some, or still have some bullish CVDs here. The bearish CVDs we had played out. Now I'm going to cover this in a bit more detail later, right? So let's first zoom out, remove this, and go to the weekly. Because if you have seen the update this morning, I added something new on the weekly time frame, which is the yellow box. And I am going to cover, let's see, I'll put these in. And I think, yep, that's about it. So, okay. Very nice. So, I added the yellow box. Afternoon, Ali. Christian, how you doing? Welcome, Mark. Mr. Marketing, good to have you here. What's up, Mark? Okay, so let's start, shall we? Minute 12, very nice. So on the weekly time frame, as you can see, I added a new box, but let's start with the beginning, right? So we're looking for an impulse to the upside. 1, 2, 3, 4, 5. Here we are still looking for wave 3 to be finished in yellow. In this wave 3, we then have a 5-wave impulsive count to the upside. Wave 4 common target 382.05 has been touched, right? Fibs taken from the low to the high of 3. We are on a logarithmic chart, so the fibs are set on log as well. The target for your wave 5 is 78.6 to 110.6k, which is a very big target area. If we get more information locally, we can get more specific, right? Because this is a weekly target area. Eventually, we will have a better idea of the daily target area, which is going to minimize this section. And then the 4-hour target area is smaller again, and then etc., till we have a much better idea of where that wave 5 can top out. Now, because your wave 2 was very shallow, it increases probabilities for wave 4 to be deep. That's the rule of alternation. Rule of alternation in Elliott waves says that if wave 2 is, for example, deep, short in time, and simple, like a zigzag, wave 4 has a higher probability of being long, shallow, complex, and also vice versa, right? So you look at time, you look at structure, and you look at how deep it went, right? Shallow or deep. Now, because wave 2 was very shallow, the probabilities are higher for wave 4 to be deep. And keeping that in mind, if we look for wave 5 to top here, including wave 3, this wave 4 could retrace back to the range that we're in right now. Now, what is also known in Elliott waves, which is not necessarily a specific rule or guideline, but a wave 4 of a higher degree likes to retrace to the wave 4 price action of a lower degree. Now, the lower degree in this impulse, 1, 2, 3, 4, 5, right? The lower degree wave 4 is the wave 4 inside wave 3 in yellow, which is this wave 4. In other words, this is the price section. So wave 4 of a higher degree, yellow, likes to retrace to the price section of a wave 4 of a lower degree, which is green, which means that the target area for your yellow wave 4 could be 73.8 to 56.5k, right? So we look for a wave 5 to top out, 3-wave structure down, hit the price section of this range, and then move up a final time for your wave 5 towards the upside to then end this 5-wave impulsive structure and look for a bigger corrective move towards the downside, right? At the moment, as it stands with the information that we have, that's the highest probability bullish scenario. We have others right, in my folders, which I won't bother you with, because at the moment we first need to take all-time high, right, and then we'll take it from there. Okay, so this is what we're looking for. Now the invalidation for this scenario is price moving down, taking out 49.3k. That is not what we like to see. We want price to continue, right? Now the probabilities are higher on the weekly time frame as well as the daily to still look for higher prices. Price here touched the 886, taken from the high to the low. And if you are looking for a very bearish scenario, which would be an impulse to the downside, this one here, where you have a leading diagonal wave 1, this would be for a bear market, right? So you have a wave 1, look for 2 and then a bigger 3. Your wave 2 hit the 886, taken from the start to the end of 1. And the 886 is, there we go again everyone, rare for a wave 2, common for a wave B or a wave X. Increasing probabilities any move down is a wave C or a wave Y, which increases probabilities to sooner or later move to the upside and take out the all-time high, right? So the probabilities are on this side of continuation to the upside on the weekly time frame and also on a daily time frame, because we hit that 886 as well, right? Now also with regards to the volume, so far we have been ranging here for a long time, and the volume is moving to the downside consistently. And that is also something that we like to see. People are waiting, right? People are waiting. They're not necessarily participating anymore. They're waiting for more clarity. We've been in this range for a very long time. People waiting for signs of a breakout or a loss of structure or whatever it is. The volume is moving to the downside, but we know the probabilities from an Elliott wave point of view are still higher to continue the trend, the bullish trend to the upside, and having these drops to the downside here is absolutely normal, 23%. Yesterday, I popped in a live stream of Kelly. Mark, you feel free to mention his name. And Kelly, he's a YouTuber, 50k subs. He uses traditional technical analysis, but he also looks at some other stuff like certain websites where you can see, I don't know, like how many people bought Bitcoin and the size of portfolios and all that stuff and news. And so Mark told me in a DM like, hey, maybe you want to check it out sometime. And what Kelly did is he showed as well on that stream like, hey, 20% down, 30% down, 40% down. That's normal in a bull market. And that's stuff that we've been talking about as well. It's normal to have these retracements to the downside. It's healthy. In every bull market, you see these retracements. So this retracement down, right, easily fits in a continuation of the trend. Also, the local move we have to the downside here, that's no problem. The probabilities only start to change for more bearish scenarios if we actually move to 49.3k minimum. Until 49.3 is not hit, it doesn't really make sense to talk about bearish scenarios, and therefore we're looking for bullish scenarios, which means continuation up or a continuation of the range, and at a later stage we move towards the upside, right? So the most bullish scenario is that your wave 4 is finished and this is a 1, 2, and we continue up. Now if you've been here for a little bit of time, then you will know that this first impulse to the upside from an Elliott wave point of view, and likely you've analyzed this structure yourself, is not too great, right? Because in an impulse, 1, 2, 3, 4, 5, right? This high on some charts is lower than this one, which leads to a truncation. And a truncated 5 in a 1, 2, 3, 4, 5, where 5 doesn't take the high of 3, is very rare, right? Very rare. However, there's still a reason why I prefer to put it here, because on some charts, this high did take that high. So I prefer coping with the truncation on my chart, knowing that some other charts actually did take the high. Because if we move wave 1 to the left, and we need to count a 5 waver in here, 1, 2, 3, 4, 5, your wave 4 is very short in time compared to your wave 2. It's not an invalidation, but is lower probabilities, as commonly wave 4 is longer than a wave 2. And your wave 4 here is very shallow, didn't hit the common target area of a wave 4 at all, right? The 0.236 was not touched. Also, the highest amount of volume in this impulse to the upside is in the high over here, your wave 5, and not your wave 3, which is also something you don't like to see. So I prefer putting that one there and just accept the truncation on my chart, but on other charts, or at least some others, because not all of the charts took this high, right? So I prefer to live with the truncation and put one here. Now, then we're looking for a wave 2. Common target for 2 is the 05786, taken from the low to the high, 64.359.8. We have now hit the 0.5. So we have hit the target area for a wave 2 on top of some additional support here, which was the high of this gap at 64.6k, oftentimes giving at least a reaction, right? So we are at a little bit of support. We even have stronger support still down here though at 63k, but we hit the target area for wave 2. Preferably though, wave 2 ends after the 0.382 fib time, taken from the start to the end of your wave 1 to compare wave 1 with wave 2 in time. The 382 is sitting on the 21st of June. So in other words, if this is a finished wave 2, it is very short. Preferably, we are looking for a bigger sideways structure and then move up to finish wave 2 after the 382, therefore also means and increases probabilities that the summer month or summer months generally, like June, July, maybe August as well, are ranging structures historically. And Flotty, for example, in the morning wrote a comment as well where he mentioned this once again, and it is true that generally the summer months are relatively slow in the market. So this could add to, hey, we continue sideways in June, July, maybe end a corrective structure at the end of July and then start moving towards August. Could be interesting. No? Now, if we then zoom into this wave 2, right, one of the scenarios we keep an eye on is a zigzag. So inside the green wave 2, 1, 2, 3, we then look for A, B, C. And a zigzag is a common target or a common structure inside a wave 2. Wave 2 most commonly is short, deep, and simple. And a simple structure is a zigzag, for example, a 5, 3, 5. So here we then have a diagonal as a wave A, looking for a 3 wave B, and then a 5 wave C to the downside. The diagonal consists of 3 waves in every structure individually. So we have our wave 1, 2, 3, 4, and we want to see a 5, preferably actually maybe another low, but we'll see. Depends on the lower time frames, could be finished here. So that's what we're going to talk about in a second. But by all means, we're looking for a diagonal and then a bit of a bounce towards the upside. We don't want price to move down and touch the 1-to-1 here at 62.2k. That would invalidate this diagonal. Wave 5 is not allowed to be longer than wave 3. So if you take a 1-to-1 trend-based sub-extension from the start to the end of 3 to the end of wave 4, you know your invalidation, right? 62.2k. So we don't want to hit it. Now, as mentioned, we are at a bit of support here. And to the downside, we still have some more support, the blue box, between 62.6 and 63.1k. I also wrote volume here because price is making lower lows, but what you can also see here is that we are making lower lows on a decreasing volume. Right, so volume is going down as we are making new lows, which increases the probabilities from an Elliott wave point of view to eventually start looking for a bit of a relief rally or at least a bounce to the upside. Now the common target for your B is the 382 to the 886, taken from the high to the current low that we have, 67k to 71.1k. Very big target area for B, but just like on the weekly time frame, right, we're going to observe what price does with regards to the subwave structures, and we actually do have some additional resistance areas First of all, the blue box here, 66.6 to 67.1. Another one, 69.1 to 69.7K. The double top at 70.1K, and then all the way at the 886, 70.8 to 71K. So there's definitely some interesting resistance areas. And if price can pass this resistance here, it definitely increases the probabilities to move up to the next area of resistance, which can be a very interesting support resistance long trade, which is something that I am keeping my eye on. So pass the resistance, flip it into support, see some bullish signs of strength, and then look for price to move towards the upside, right? So that is an area of interest that I have. And this one is also an area of interest that I have. But that depends on the reaction, on how price then would move towards the downside. So yeah, we're starting to look for price to get a bit of a bounce towards the upside. Either A is already finished and we look for continuation, right? Or we have a bigger three-wave structure in 5, one more move down, looking at 63K, interesting area, and then move towards the upside. Depends on the local structures. We're going to cover that in a second. Now after B, we then look for an impulse down in C. C has to move below your wave A, and then a move towards the upside. So that is the bullish scenario on both the daily and locally. Your bearish scenario would be a flat. At the moment, the probabilities are higher to take out the all-time high before, maybe at a later stage, the low. But at the moment, taking out the all-time high first has a higher probability based on the structures that we have locally. In this flat structure, we have a 3-wave A, 3-wave B, 5-wave C. Take the all-time high, look for weakness, resistance, preferably a bigger range, see a bit of a move down, retracement, bear CVD, get back inside the range, acceptance in the range, continue towards the downside. Moving below, 56.5K. Inside wave B, we most commonly look for zigzag family structures. In this case, I have a double zigzag WXY on my chart. Wave X common target is where we are right now, 302 to the 618. Don't want to hit the 0.7 at 61.1. That would significantly reduce probabilities for a WXY double zigzag. Common target for B on the chart, 77.9 to 80.4K. And then we look for an impulse to the downside below A. Now what you can see is that in both of these structures here, we look for price to move up first to take out the all-time high at the moment. And then we'll just take it from there. It doesn't matter to think about what's going to happen after you take the all-time high. It all depends on how price moves to the upside. Do we get very impulsive continuation to the upside, volume increasing, bullish structure, and we just push? I mean, we just look for higher, no? But if we do, this is all about preparation. If we do find resistance here, start to build a range, see signs of weakness, bearish CVD, acceptance back inside the range, hey, probabilities will increase to move towards the downside. It's all about being at least prepared, right? And that is all we do. So yeah, data gap. Now inside wave X, so we are looking for a wave X, zigzag in W, wave X to the downside. Inside wave X, keeping an eye on this flat structure. So we have a wave A, wave B, and then the same diagonal, but now the diagonal is labeled a wave C instead of a wave A. Wave C means it is an ending structure, right? And after wave C, in a most bullish scenario, you want to see another 5-wave structure, 1, 2, 3, 4, 5, an impulse to the upside. Common target for C is the blue box. That is where we are right now, which also includes the support box at 63K, right? In case price wants to move down once more. We don't want to hit 62.2K. The difference between the zigzag and the flat is that after a flat, which is a finished structure, if you look for continuation, you want to see, as mentioned, an impulse, a 5-wave structure to the upside. In the zigzag, we want to count a 3-wave corrective structure to the upside. Sorry, I said downside, I think, just now. So we're looking for upside, right? But for a wave B, you want to count a corrective structure and then move down in C. While after the flat, you're going to be looking for impulsive continuation to the upside. So that is the difference, an impulse or a corrective structure. We'll only figure that out once we get more information. Okay, so the probabilities on the weekly are higher to still continue up, continue with the trend, unless you hit 49.3k. That is when we at least have to start considering bearish scenarios. But the bearish weekly time frame scenarios, so potential bear market scenarios, only really become very relevant if we move below 40. We're currently at like what, 65. On the daily time frame, probabilities are also higher to move up first and take all-time high before 56k, based on what we see locally at the moment. Right? Even in the bearish scenario that I have locally, which I didn't yet show, but I mean I can. Where is it? Not that one. Oh, here. Even in the bearish scenario, preferably you first continue ranging anyway and look for a more local bounce before a move down. So this is your bearish scenario, A, B, C, and then move up. But we don't yet have the information to give this the highest probabilities, because ending wave B at this high is low probabilities from an Elliott wave point of view because of the structure to the upside. So therefore, for wave B, preferably, we are still looking for at least a bounce and then a move down. Now, if we do get this bounce, we will know, is it impulsive? Is it corrective? Are we looking for another move down, or are we looking for continuation up? If we are going to be looking for another move down, then the bullish scenario is going to be a zigzag A, B, C and continue up, and the bearish scenario is going to be continuation down to take the low, no? But at the moment, probabilities are higher to take this high first before the low. So, yeah. And also locally, price moving down. There's a lot of overlap here as well between every structure. Volume moving down as price is making new lows. So there are signs for a bit of a at least relief rally, bit of a move to the upside, looking for a bounce. Now in the video last night, I spoke about a flat here. That was nice. So I spoke about the A, B, and then looking for a C, and then possibly then continuation down, of course, if you're going to be looking for a bigger structure, right? A bigger three-wave structure if you want to move towards that 63K. Okay, so let me put this on the chart so we can do a little bit of analysis here locally. I don't have any count on the chart, but I don't really need a count to explain what I'm looking for. Let me put the target boxes on as well. Okay, so current resistance is the point of control of the previous range. Only above there you have the value area high at 65,765 on my chart. Volume profile is from this range. If price can pass the point of control and the value area high, the probabilities are high to move to the area of resistance all the way up here, right? 66.6 to 67.2K. At the moment, we made a low and we've been moving to the upside. Higher low, this was with bullish CVD divergences on the chart as well, which you can see here. Higher low in price, lower low on the CVD. Bullish CVDs played out. Price now again, higher low in price, lower low on these CVDs. So we again have a bullish CVD here on the chart. Mind you that the bearish CVD, because we did have one, already played out. We had over here a lower high on price, but look at the CVD. Lower high, but here, yellow, higher high. But that CVD played out when we went down here and took this low. So the bearish CVD at the moment played out here. And the only bearish CVD you have to deal with now is the local 5-minute one. So even though on a 50-minute time frame we have bullish CVD divergences here, locally on the 5-min you have a bearish one here. In other words, you want to invalidate the bearish CVD divergences to increase the probabilities to move up from a CVD trading standpoint, right? Because clearly we have a lower high on price, but a much higher high on the CVD. Yes, you have the bullish one here in yellow, higher low, lower low, but in this current state, the bearish one is more important. You have to invalidate the bearish one to increase probabilities to actually move back up. So far, this move to the upside, I saw a count from Douwe in Discord. He had a 1, 2, 3, 4, and then a wave 5. So that is one way to count this. Personally, if I go to the 15-minute time frame, we can clearly spot this range here, and we don't really see the range here. So it also looks a bit three-wavy. No, flat here. This flat can be a B, X, 2, it can be anything. But you can't be bearish as long as you don't take this low, because of the bullish CVD divergences. So if price takes this low, it increases probabilities for a three-wave structure and to sooner or later take out this low. But for now, because you have the bullish CVDs as well, it's difficult to give higher probabilities to the bears already. So basically what I'm looking for locally from an Elliott wave point of view is either take this high and probabilities increase to move to the next resistance, but that means you're going to get close to the high. So therefore your wave 5 in a diagonal, as we're looking to end a diagonal structure, your wave 5 could be finished. However, preferably from an Elliott wave point of view, the highest probability with this low here would be that this low is part of a flat looking for a bigger three-wave structure and then move down once more to take the low. So from an that's that. So from an Elliott wave point of view, at the moment, probabilities would be high to still look for at least one more low, hit the area of interest, observe what price does here for then a potential bounce. But if we do past this resistance, I could be looking for price to move up if we can retest it. The problem is I can't really like this is high risk trading because of the bullish CVDs. So I already have a short running from higher. I'm so not interested. So we have bullish CVDs here. So even though from an Elliott wave point of view, this looks very like three-wavy, this looks like quite a nice flat. So there's always a potential for a WXY type of structure here as well. A move to the downside can be 1, 2, 1, 2, and we can get a big bang to the downside, right? So you have 1, 2, 1, 2, and then look for another, and then a big move down. Of course, is on the card. So a multi 1, 2, start a second impulse down for then A, B, C, and then look for a bounce. This looks like a flat structure. So I'm not too confident of a wave 5 already being finished. But at least if you pass the point of control, probabilities increase to move up here, which of course is quite a nice move. Because there's not much resistance here. There's not much going on. But from a Elliott wave point of view, probabilities would be higher to still take the low. But I don't like going against the bullish CVD. So in other words, what I look for is if price takes this low, you invalidate the bullish CVD divergences that we have, right? Which then increases probabilities to look for lower prices as well. If price takes this high, probabilities increase to look for the next area of resistance. So that is pretty much the two areas I keep an eye on. It's these two. Now this is all low time frame and low time frame stuff. Again, let me zoom out just to make it clear again what we're looking for. Because as the low time frames, they can be very interesting. They can also be very confusing for people. We're looking for a diagonal. The volume is moving to the downside as price is moving to the downside as well, creating new lows, right? And we're looking for a diagonal to end sooner or later. So we're looking for a bit of a relief rally to the upside, where we then have a resistance 1, a resistance 2, right? Arguably, this one is quite interesting. I would like to then see this one passed and move up a little bit higher. So what we are looking for generally is this. So the highest probability is to look for signs of strength. We had some bearish CVDs here, played out, but we still locally have a bit of bearish CVDs as well, so remaining patient, waiting for price to show what it wants to do. But we are starting to look for a bit of a bounce to the upside to hit resistance 1, and if we can pass it, resistance 2. Take it level by level. Where my area of interest is definitely here. So for longs, I personally am looking to observe what price does here, or it needs to flip this resistance into support, and I can long this structure to the upside. That's the only two trades that I keep an eye on now, like new ones. Not interested in shorting anymore. I'm not interested in longing anything locally here. I either long here or I either long up here. I'm not interested by all means anywhere else. That depends on your plan strat, but this is my plan or strategy. And I cover this in a lot more detail in the Koens setups channel. Link is it's the top link in the description in case you haven't seen it, which gives you the Koens trades channel and then the Koens setups channel. Follow the steps and you'll get in the setups channel. So and I explain in a lot more detail why I look for certain setups at what areas. Not necessarily if I take or not, because I'm not a signal service, but I hopefully explain well enough why a setup is interesting from an Elliott waves point of view, as many people learn Elliott waves, but they have difficulty to trade Elliott waves, which is of course by itself, that's the next step. You have like studying, implementing, and then actually trading it. So by explaining why an Elliott wave setup is interesting in that group, hopefully people understand. And then I always have additional support or resistance stuff I look for. So if price comes here, even though it's an area of interest, I don't have any limit orders. I wait for the reaction. And if I see what I want to see, that's when I join. All right. Same here. So yeah, that's that. And now we chill. Okay, chatting and Q&A. 23 minutes left. When did we start the analysis? I forgot. I don't know, 15 minutes or something. After the live stream, I will check the timestamp. I'm not sure what minute I started the analysis. I think it was earlier than 15. Oh well, people can always just rewind back. I think it's too far, but that's okay. There we go. Quick look what you've been up to here. Cheers, Tim. And Mark. Yeah, if you enjoyed here, don't forget to hit the like. Trending views, what's up? How you doing, Yul? So I call you Yul all the time because that's your username, right? So trending views is what you show, but your handle, your YouTube handle is Yul. And in YouTube Studio, I see the handles of people. So yeah, but what's up, man? How you doing? Welcome to have you here. 5-wave Greenbrook, so big. Yep. But that's why it's a weekly box. So then as more information comes in on the daily, on the 4 hour, on the 1 hour, and the 50 minutes, you're going to have a box of a few percent that's going to be left. What's up, Flotti? How you doing, man? WD 40. Dionysos, if you look at previous bull runs, does it happen often that a lot of the same patterns come back? Every bull run for me is different. it has a different feeling, a different identity. The market is different, the economy is different. But of course, the patterns come back, yes, because a bull run in the end is one big impulse. So it's a 5-wave structure. And inside that 5-wave structure, you, of course, have corrections. So, you have a big 1, 2, 3, 4, 5 bull market. Inside your wave 3, you have an internal 1, 2, 3, 4, 5. And then, of course, your wave 4 and your wave 2 are corrective structures. But they don't have to be the same structure. They can be different. Wave 2 is most commonly a simple corrective structure, which means like a zigzag or a flat, and it can be any structure except a triangle. And wave 4 is generally a more complex structure. So you would in a wave 4 expect a WXY, a triangle. Flats are quite common in wave 4s as well, creating a fake wave 5. So that is also why I consider it on the daily. We were in the analysis. Compare, let's see, making balance to 16. Yeah, I mean, 63, yes, 68, and 64, 3. That has, potential. You might even go below 63.9. If you go 63.9, then 68, then preferably you go below 63.9 the second time. It also, of course, depends what you are comparing it with in the previous bull market. Like, are you comparing it with the range at 20K or the range at 30K, or, and that's difficult because, we have a bull run so far from 15 to 70K. But do we really know how high we're still going to go? No, we don't. We have indications, we have targets, we have Elliott wave probabilities, we have an estimation of time as when the bull run will end. We have a target as well on the monthly chart, so we are prepared. But what we can only really analyze is the price action we have at the moment. And this range at the moment between 60 and 70K has a higher probability to still continue towards the upside. And if we then take out the high, right, as the probabilities are higher to still look for price to move up, if we do take this high, we just have to wait and see what we get. Because we actually don't know if this range is this range, is this range this range, is this range this range. No one knows, right? No one knows. So this move here, you can still explode and look for so much higher, but at the moment probabilities are not higher for like a triple 1-2 here, 1-2, 1-2, 1-2, and the move up. Probabilities for now are higher for this, right? So you look for a move up, finish 3, then a 4, and then a final 5 to the upside, right? But by all means, we can only take it step by step. So the moment price would take all-time high, that is when we can observe new structures. And when we get a new range, we know better where we are. So it's like, it's almost level by level, level to level trading, but it's at the same time, it's actually range to range trading from an Elliott wave point of view. The moment, like all-time high trading is super easy, actually. You just look for price to move up until you create a very big range again. As long as you don't create like big ranges of multiple months, you just look for upside. What's up, Tortuga? I don't use any CVD indicator on TradingView. I use AGGR, which is this website here. And if you would go to the Good to Know channel in Discord, scroll up, then here's the link. Couple of templates, but including the Bitcoin template, which is this one here, which is the template that you see me use. So it's a separate platform. And if you haven't seen it yet, by the way, don't forget to check out the playlist, everything you have to know about Elliott waves in there. ADK is definitely still something that's on the cards for the future. Yeah, and Pablo, I also have a video on my YouTube. This one. So if you go to educational content, CVD. This video will teach you what you need to know about CVD. Of course, you already know where I got it from. And also in Discord, I have a one-pager, which helps you with CVD. Shows you exactly how it works. And potentially how to trade it. It's all context, of course, right? It's just another tool that you can add to the tools you already use. Yeah, so what Tortuga says, I am a fan of this. What I would really like to see is fear, panic. So, but I mean, at the same time, it has to be said that at here at 24K, there wasn't really any fear, panic. It was a big range. We had no deep retracements whatsoever. So, of course, even though it would be really nice also here at 24K to see a much deeper retracement to make people fearful and then move up, you can also have that scenario where people miss the boat as the low is in and we just go. And then people FOMO in once you take the high. So there's something to be said both ways, but I wouldn't mind like that flat from a psychology point of view. Holy moly, this would be hilarious. This would be so cool. Grab the high, absolute fake out, people buying, YOLOing, we go to 100K, 500K, 5 million per Bitcoin, blah, 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 blah. Moon boys, move down, take the lows. Mindset here, bull run is finished. 5 waves are finished, right? 1, 2, 3, 4, 5. Oh, we go down. I got to sell, right? Like blah, blah, blah. Absorb it, range, bit of bullish CVD, blah, 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 boom. And then here it's going to be, oh shit, I missed out. Oh damn, I sold everything at the low. Oh, when are we going down? When do we get a retracement? When are we coming? Are we still going to see 50K? Are we still going to, that's what you're going to get. So from a psychology point of view, that's the most interesting scenario. It's just that from an Elliott Waves point of view, we first need to take the all-time high and then we'll take it from there. No, it's just that psychology-wise, it would be really nice. That's correct, Jason. Where did you take the short? 1 second. Gonna show it. Koen Setup channel. Reaction based. Price moved down, came back up. Weekly naked point of control. I already planned the trade, right? I already had the idea to short at 67K. We hit it. I saw weakness. I took it. Right? So that is the one. Oops. So this was the one, right? This is the short. I'm still in that one actually. Of course, managed well. But that is the channel where I share why I do certain things. Not if I enter or not, because that's up to you. I don't care. But I explain why a setup is interesting. So yeah, that's where I took it. I explained it's reaction based and everyone looks for different reactions, depending on their style. But I explained why it's interesting from an Elliott wave point of view. So I was prepared. I had my alarm, and the moment it went off and I saw weakness, I took it. Oh, love. Elliott trades pattern up. What's up, man? Thank you. Very kind of you. Do you have anything written down when it comes to invalidation points? I would recommend, with regards to invalidations, to check out the playlist here. oops, this one. So go to playlist or my homepage, right? And then go to this playlist. Everything you need to know is here, including also invalidations from an Elliott wave point of view, not from a setups point of view. So in other words, let me do this. This is going to go very quick, but you can always play it on 0.5. If we have an impulse, 1, 2, 3, 4, 5, as long as wave 5 is not finished, your invalidation is the low over here of the impulse. The moment you start a wave 3, the invalidation is going to be the low of your wave 2, and the invalidation, as long as your wave 4 is not finished, is the high of wave 1, right? Or the 0.618, because wave 4 is not allowed to hit the high of wave 1, nor hit the 0.618, because that's also pretty much an invalidation. For a zigzag ABC, the invalidation is the start of your wave A. For a WXY double zigzag, the invalidation is the start of your wave W. For a sideways WXY, you don't really have an invalidation because wave X can move above your wave W. Generally, your wave Y moves below wave W as well, right? If we look for a flat in an A, B, and then a wave C, if you have your wave A and your wave B, your wave B has to hit the 0.9 fib taken from the start to the end of your wave A, because if it doesn't, it's not a B. So anything below is an invalidation for a flat, pretty much. So you have to think about a WXY in that case, right? Triangles, A, B, C, D, E, right? The only wave that is allowed to go above or below the previous structure is wave B in a running triangle, where you have a wave A, B, C, D, E. This is allowed, right? However, your wave C is not allowed to go above wave A or below wave A. Your D is not allowed to take B. E is not allowed to take C, right? Yeah. In a double 1, 2, 1, 2, 1, 2, invalidation is taking the low of the first wave 2. In a diagonal structure, 1, 2, 3, 4, 5, we preferably want to see overlap. As long as your wave 5 is not in, the invalidation is the low of your wave 2. As long as wave 2 is not in, the invalidation is the start of your wave 1. Right. The moment 5 is finished, the invalidation is the low of 1 once again. If you look for a leading diagonal, that is. So, yeah. Interesting, no? But it's all calmly also, explained here instead of so quick in a live stream. If you have a pen and paper in front of you and you try to write down what I just said, you probably have to go back a couple of times. DXY on the monthly. I think I once upon a time had a look at DXY, but yeah, it would be something maybe for an altcoin stream as well, right? Every Sunday altcoin stream. Yeah, it could be interesting. How when you do the videos, you stay so well organized? I guess that's just personality and habits. I guess everyone is different in the way they present their content. I have always been very disciplined. And I am very structured, in case you didn't notice, but you did. So, yeah. I think what helps with being organized is having very clean charts as well, right? So I don't have a lot of shit on my charts. I have my target boxes as well. So it keeps it very clean. I create sections in my object tree, as you can see, right? So I have sections, which helps as well, instead of everything being below or above one another, making it difficult to search for what you're looking for. I have all sorts of different sections, which makes it easy as well. So it's these small things that create the structure that I find helpful in my trading, in my content creation. With regards to the videos, they are organized and structured, probably because I am a global keynote speaker as well. So I have a lot of experience making presentations and speaking in front of an audience, which in this case is the same. But of course, when I present like slides at an event, for example, as a global keynote speaker, my slides have to be very clean, very structured, and only the information you talk about should be on that slide, right? No random shit. So that's why when oh, my alarm is going off here because I have a meeting soon. So that is why when you look at my videos, I almost present the scenarios like a PowerPoint. All right, so it's very, very clean. And I only put on the chart what I talk about. I don't have anything else except for what I talk about. Anything here has a meaning. I don't want anything on my chart when I have a scenario that I don't talk about. All right, so I talk about everything, and if I'm like, I don't want to say this, right, then I'm going to remove it. So if it's like, okay, I'm not going to cover wave B anymore and the target area of B, I'm going to remove it from my chart. Keep it simple, and then that's that. So I guess it's also part of my experience as a speaker that comes back in my content. Newsly. Well, actually, I mean, maybe personal opinion, but they very often show one CVD, other neutral, or both the same side. But yes, they also show opposites. But then it's about the context, right? And other tools that you look for, your highest probability Elliott wave count. And if you don't have clarity, the best thing is to wait. Like whenever you have opposite CVDs, bullish and bearish, right? If you're a beginner, just do nothing. Just wait till one of the CVDs is invalidated. Yeah, because blue nor yellow is more important than the other. They're both as important. Good afternoon, Murat. Good to have you here. What's up? Cheers, Christine. Manek. Use blue and yellow at the same time. I use them. I always use them together. Feel free to also remove a line or add a line, or it's just a template. It's what I use, and of course I am experienced in what I look for. But I also know people that change the CVD template to having 4 individual lines or 1 line. But it's about context. So if you're at support and one of the lines shows bullish CVDs, then it's more interesting, right? If you're at resistance and you see bearish CVDs, it's more interesting. So it's also context, and it works together with the other tools you use. But reading CVD, especially also the ones, of course, that I use, it takes some time, of course. What's up, Anil? Darpon, welcome. The 3 levels you mentioned with the values, yes. So over here to the downside, 62 point. Can you see this actually because of the webcam? 1 second. Yeah, you can, right? Yeah, so 62.6, 63.1. Below that, by the way, 65 to 61.5. And above, 66.6, 67.1. And above, 69.1, 69.7. So those are the 3 closest to price. Oh, guys, I have to go very soon. So I got to go very quick here because I have a meeting at 4. Analysis has been done earlier. I'm going to be very short now, right? So you just have to check the analysis. Holy moly, I'm so far behind. Altcoins is for Altcoin Sunday. 4-hour time frame analysis. Check this analysis, guys. Guys, I literally did the analysis, right? So if you want analysis, then go to the time. I have personal rules, but that is diamond. So if you're a diamond member, you will see my personal trading strategy, the second one. And besides that, I trade Elliott waves, where I just use 4 signs of strength. If we pass the point of control, as explained in the analysis, then yes. This is done in the analysis. So I'm gonna, 1 second, I'm gonna write someone that I'll be... that I'm on my way. Yeah, correct. That is correct, Donovan. This answers yes if you move above the point of control as shown in the analysis. How do you tell if it's weakness? How do you know if it's a strength? Depends on the tools you like to use. So I use everything that you see in my videos. Support, resistance, horizontals, volume, indicators. Depends on your plan or strategy. So answer this one. Volume is one of my favorite tools, yes. Of course, I also like CVD. I like Elliott waves. I look at the structure. I look at time frame horizontals. Yeah. CDMs, not yet, but we're working on it. Cheers. We should have something soon. Wu says, I even have spots. This is, of course, a personal plan, and everyone should have their own plan or strategy. So Sunday is altcoin streams, yes. Altcoins Sunday, both blue and yellow. Yes, I recorded them in the past, but that's I gotta check my files because it's years old data. And so far it's still very relevant to me. But of course, the best thing you can do is if you want track your own data, most trustworthy. But I have data, but it's very old files, so I would need to dig them up again. Okay, quickly covered everything. I have to go because I have a meeting. I'm already 1 minute too late because it's past 4 p.m. I just wanted to quickly go through everything. So the DXY is not an altcoin. Well, doesn't matter. I'm going to do it on a Sunday or another stream, but not during Bitcoin stream. So that being said, thanks for being here. Appreciate you spending some time on the channel. So the analysis has been done at 15 minutes or somewhere 10 minutes. I will put the timestamp in after the meeting that I have right now. So make sure to then check out that analysis. Tonight will be another normal video, so a video update. Let's see if locally price is going to give us any more information, yes or no. But yeah, that being said, time for me to jump in a meeting, and I'll be in touch with you again very soon. So tonight, a normal update video. Tomorrow morning, of course, a normal video. And tomorrow afternoon, another live stream. So I'll see you then.